Okay. This is my third time recording this video for my weekly video. The gremlins are starting to take over. So if I seem rushed, it's because this is the third time I have talked about what I see going on in the market this week. So look, we start with industrials here. This is a 12-year price chart. If you look at the screen, it wants to break higher. It's above, I'm going to call the trade war highs, which is what those two blue lines are. It still has not broken above February 2019 highs, but it is coiling, and man, does it look like it wants to break higher. Now, if I dug into, and I'm going to, into a couple of the price charts within a couple of the individual companies within industrials, the first one I'm going to pull up is Caterpillar. This company sells very expensive construction equipment. And again, there's a very similar story going on. It wants to break higher. It is basically where it was 2 months ago, hasn't fallen, hasn't crashed. And so these stories of the market crashing, you got to look to the price charts and say, does price believe things are crashing? And so you have Caterpillar really holding up, still has not broken above its own trade war highs, which again, right there, trade wars really hurt Caterpillar, right? Which is telling you there's a lot of business Caterpillar does with China. But let's pull up Deere. Deere also makes a lot of very expensive equipment. And look, one of two things are going on. Either Deere is a much better run company than Caterpillar because right there is the trade war highs. And you can see Deere is at new lifetime highs. And they actually broke above this. If you look at the screen, and I know I'm super zoomed out, but they broke to new lifetime highs at the end of 2019. And it wasn't until COVID came along that it pulled them back down into that sideways channel there. You can see that now between the two blue lines. But in July of this year, it broke out to new lifetime highs. So that is a non-trivial, right? That is a telltale sign that if the market's going to crash and go to zero, like the all the social platforms are telling you, it seems weird that Caterpillar is holding up well and wanting to break to new highs after the trade war tweet in January of 2018. But also you got Deere, and then you got Cummins, CMI. You bring in them and you say, wow, they broke out to new lifetime highs here too. And they have coiled recently. I mean, it's really hard to see this on the screen. I can zoom in, but they coiled and broke to new lifetime highs recently. So they're also breaking to new lifetime highs. So you have a sector called the industrial sector that's supposed to be crashing or falling, right? I mean, that's what you hear because, guys, scaredness sells. If a post or a platform or a channel or an article can scare you, they've learned that there's a higher likely of you buying their subscription or their product, whatever their product may be. But nothing looks scary about Cummins and Deere and Caterpillar. And again, here's a zoomed in of the industrial sector really working. It's above its trade war highs, which is very bullish, and it's coiling. And that type of coil is called a flag. And that is a very bullish type of coiling position. Now, of the industrialized sector, there's 16 subsectors, or there's 16 parts that make up the XLI or industrial sector. 8 of them are at new lifetime highs or are above their February highs of this year. So that's pretty impressive. And you can imagine, or maybe not, but trucking is at new lifetime highs, railroads, delivery services, and then you can imagine what's not. Airlines would be one, aerospace would be one. They're getting hit pretty hard. But net of that, you have this economically sensitive sector saying we're in pretty good shape. Now, I'm not saying whether the bottom 95% of this country is in good shape or the $3 or $4 trillion that the Fed printed was fair. It wasn't. I'm sick and tired of this country, and the Fed is the government. I'm sick and tired of our government bailing out companies and not people. I would have loved to have seen that 3 trillion. I'm going to use 3 trillion go to the every single person whose adjusted gross income was $50,000. If we took that math, every single household that made 50,000 or under, they would have gotten about a $100,000 check. Now, I would not have gotten one. I would have felt better about the bottom 50% slash the households that make 50K get a $60,000 paycheck for free than all these zombie corporations getting them. I would rather protect people than corporations. And that's a debate I will do all day long and twice on Sunday. I believe our government's job is to protect people and not corporations. That's not what's going on. It's not going to change. No one's calling me. But again, what we have here is an industrial sector, a economically sensitive sector that is looking very strong. Now, also, I'm going to show two more price charts, then I'll hit the pause button because, again, this is the third time I've recorded this. Third time's a charm. Here's the U.S. bond market. It is down from the beginning of August. Let's call that 2.5 months. So typically when price falls for the bond market, that means people are less scared, right? It's hard to get really bearish about the stock market when the bond market is falling. And this looks more falling than consolidating. This is what consolidation looks like at the end of 2019. That's consolidation, okay? This is more falling, not crashing, not collapsing, but it's down about 1.5%, which, guys, is not a big deal, but it's not cranking higher, right? And this is the bond market of the US. So it's hard to get really, really negative or negative at all, or even negative a little bit when the place that people panic into is falling in price. And then lastly, let me leave you with the inverse of the S&P 500. So when this price chart goes higher, that means the stock market is falling. And you can see those spikes there, one into the end of 2018 and one at the beginning of 2020. But what I most want you to notice is this price chart is accelerating to the downside. That slope, that sledding hill is getting steeper and steeper. And that's just a sign of the market getting stronger and stronger. So the takeaway is to really turn to price, which really means turn to your eyes. Let your eyes see the patterns, and then the patterns create stories, and the patterns create pictures for you. But that's not what we've been taught to hear things, right, through certain channels or read things. And the problem is we then have to create our own pictures. And to me, the short circuit way is to go look at a price chart, right? So if the market's going to crash, the market actually has to be falling. And if you look at the S&P 500 with dividends reinvested, which is what I'm looking at right here, I'm recording this on Tuesday, the price is above the February high, and it's above kind of the sideways zone, which is what the two blue horizontal lines are. So we looked at price. We have three economically sensitive companies, Cummins, Deere, and Caterpillar, are either at new lifetime highs or just so close, so close to breaking out to new lifetime highs. Guys, if you like this, please subscribe. Leave a comment if you have a question about it. I read all comments. Or you can just email me, rc@fearlesswealth.com. But thanks so much, guys, for being in my world, and I look forward to seeing you on the next video. Okay, thanks.